Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the trading setup as well as market strategies you need to follow for the day. The Nifty is walking into the final day of the week in terms of the trading session. Having closed below 25,400 mark on the weekly expiry session, the index could continue to face selling pressure again today on the back of IT names after the earnings miss that's come in for the first quarter of TCS that came out last evening after the market hours. So far for this week, the Nifty is down by 0.4%, Midcap index is down by 0.9%. We've also seen that the small cap index is down by about 0.4%. But critical question clearly is that TCS has disappointed, but how much of it is already in the price because IT stocks had gone into the earnings also on a subdued manner. The IT index itself is also down by 2% this week so far. TCS itself is down by over 1% this week and down by 2.3% this month. So we'll have to really find out what will be the impact. In response to the IT earnings of TCS, we've seen the IT stocks, ADR stocks of Infosys and Wipro, also in the US, fall up to 6% in the overnight trading session. Although on the Wall Street, again, a record close was seen on S&P 500. Nasdaq ended at a fresh peak. Consecutive second session was seen on that front. Dow Jones also gained by about 0.4% in trade as well. But futures on the Wall Street have actually tanked in the early hours of Friday. And that's after US President Donald Trump has indicated two major things. One, a major statement that he wants to make on Russia. And he's also announced that Canada will also face the 35% tariff as well. Asia Pacific markets are trading mixed right in the morning trading session. Nikkei was up about 0.2%, Tropics advancing 0.7%, Kospi about just flat with a positive bias, whereas ASX 200 was down flattish with a negative bias. GIFT Nifty futures indicates to a negative start, almost to 130 points or so at 25,285. So gap down start is what we expect, especially IT stocks will be rightly in focus right in the beginning of the trading session, but we'll have to see how things pan out. Let's welcome our guest on board. Lokpriya joins in. He's the CIO of Equities at LGT Wealth. Warm welcome to you and thank you so much, Chakri, for joining in on this program with us. Let's start off with the IT names and the numbers that have come in for TCS. What's your first take? Definitely a miss, but are they extremely disappointing to further cause, so much dampness, which has already been seen on the IT space? So how much more is in the price and what else could we see on the IT pack now?
Good morning. Thanks for having me. It's good to be on your show as always.
Thank you.
If you look at IT as a sector and TCS in particular, we went into the quarter expecting weakness. And so the estimates were weak, were conservative to begin with. TCS has missed those numbers, both on the revenue front. It held out on a margin front, but the order book basically, came in at the mid to lower point of the range at about 9.4 billion. This indicates that the customers, clients of TCS are waiting and watching for tariff certainty before they give new deals to TCS or IT industry in general. And some of the existing deals are also slowing down in terms of converting into revenues. So against this backdrop, I think this uncertainty will continue until the tariff situation becomes clear, what India's and world's tariffs are. So until then, we should be underweight IT.
Underweight IT. Let me just also reiterate some of the brokerage houses' takes after TCS earnings today. Nomura on TCS has a neutral rating, a target price of 3,780. They definitely believe there has been a miss at the revenue front versus the consensus estimates. Also, however, say that significant margin improvement in the entire fiscal year 2026 is unlikely. And they've also cut 1 to 2% of the FY26 to FY28 EPS estimates as well. And HSBC on TCS has a hold rating for now, the target price of 36.65. They believe, of course, a miss on top line is something which will weigh on, largely led by BSNL, but also with a miss on the international business of a more concern. And usually, TCS seems to be struggling with profitability as well as what they've marked. JP Morgan, on the other hand, a neutral rating and a target price of 36.50. They do believe that both it started off FY26 on a weak note on the back of both BSNL contracts as well as international business too. And they also see that, the TCS is blaming the weakness, unexpected weakness that they're seeing on uncertainty from the trade negotiations that Chakri also pointed out as well, and geopolitics also has to be marked out. Also, there is no clarity from TCS as to whether they will make a decision soon enough or will completely give it a miss this time around when it comes to wage hikes. Now, that's another part that I wanted to discuss with you. When such a large conglomerate, it actually goes on to say that, we are going to be probably not able to take a decision on the wage hike front, on the hirings front. There is still a question mark. What does this go on to show for the entire sector and the sentiment that will be, taken in and trickling down?
That's a very interesting point, simply because, the attrition for the IT industry and as well as for TCS continues to be 13% plus, which is a fairly high number, which indicates there are enough jobs out there for IT employees. So what is happening is basically, long story short, the companies are establishing GCCs, their own in-house outsourcing departments. And so IT employees from TCS Wipro are moving from TCS to these GCCs. So there's enough jobs around. But, the IT services companies, because of the uncertainty, tariff uncertainty, are pausing on the wage hikes.
Okay. And overall on the IT pack, also beyond TCS, you did say underweight IT. Will that also include the mid-cap names as well? So far in every quarterly earnings, no matter how muted they have been, it's been the mid-caps that have turned out to be outperformers of, so those that are heavy on, say, names like Persistent, Coforge, also Emphasis, how are you looking at, or Birlasoft for that matter? These stocks have actually done pretty much well in the last few cycles. How would you look at these mid-cap names, Chakri?
You're right that they have done well, but if you look at, for instance, what happened to Tata Elxsi, it's an R&D focused company, and R&D, spend has come down, IT spend has come down simply because of the tariff uncertainty. So against this environment, I think, companies like Persistent, which are more heavy in a particular sector, will continue to have a certain bit of advantage. But in general, mid-cap companies also will face the brunt of this tariff uncertainty. And one last point is, the tariff uncertainty does not relate just to India-US tariff rate. In the US has to establish tariff rates with the EU and other big major trading partners of the US. Until that is complete, IT uncertainty will continue.
That's a very, very important point that you make, Chakri, and I think that draws our attention to the entire tariff talk then. July 9, the original deadline for the implementation of the reciprocal tariffs is gone by. We now have a new, deadline of August 1, by when at least 14 plus 8 countries will be, seeing the implementation of the new tariffs that have come out. We are now seeing some fresh statements. Again, Trump is talking aggressive with the countries that have not been able to, strike a deal, at least case in point with Brazil for that matter. The tariff was much higher than the first time that reciprocal tariffs were set for them. Now it's Canada at 35%. Russia is something which is being seen that a major announcement will be coming in. So it's back to Trump's, everyday tariff statements. But the markets, are not reacting as much. If you look at the US markets, they're at record high levels. They are not budging with everyday moves like we had seen in April 2nd, 3rd, 5th, that entire week and month. But and even in the Indian markets, they're just waiting and watching at this point. They have gone into a huge consolidation in the last 2 weeks. How are you looking at, what could be the impact of what happens on the tariff decisions?
You kind of summed it up well, because, starting from April 1st to now, a number of times the rates of tariffs have changed, and the numbers are very huge, the swings. From 10%, China went to 100%, 135%, back to 50%. And so the market has come to discount that none of these numbers are really practical, and therefore the markets are continuing to march upward in the US. If you take Canada as an example that you mentioned, now the 35% is a very high rate for Canada, and clearly they've said that if Canada retaliates, they would raise the rates further. So that is something which is clearly not tenable, because the US manufacturing of its automobiles happens in Canada. So the market is discounting that, these rates are not terrible, and finally it will settle down at some lower rate. What that low rate, we don't know. We are waiting and watching, and so is India.
Right. And to your point that you marked out, that it's not just a deal with India that we have to wait. We have to really see what happens to the world as well. So even if India is hoping for getting a sweet deal, that is getting more and more certain because there is a delay in announcing a deal. There is no mini deal yet. China, Vietnam, all of these, Bangladesh, they all happened before us, and UK happened before us. We have seen slightly higher than the original tariffs that were given to them on April 2nd for all these countries. For India, Indian officials have again clarified that they are going to go back to the US and renegotiate on certain other points that have not got any clarity. So we are probably taking that time up till August 1 to maybe have a sweetened deal for us. Even if India manages to get a much better deal than the other Asian peers, Asia Pacific peers, if the tariff uncertainty continues with the large developed countries or other countries, like you pointed out, will we still be at perhaps in an uncertain zone?
See, India has two or three important points, I believe. One is clearly, the agricultural and the dairy segments, need to be outside the scope of the tariffs. 60% of India's population live are in the rural areas, and therefore, letting the US agricultural products come into India will clearly hurt a very big 60% of the India's population. So, that has to. So, how much US is trying to get into that zone, India is resisting, and for the right reasons. So and second is India's tariff rate is 26%. That is the number that was announced. So any number that is lower than that will be viewed, I guess, relatively okay. But clearly, I think, the whole world will probably settle down somewhere at about 10% tariff and China at 50%.
Okay, got that. Let's talk about a few stocks and pockets that we must mark. The markets are close to settling in the pre-open trade. We have some weakness. Nifty is hovering around 25,200 mark in the pre-open right now. There is a Glenmark Pharma stock that's at a 10% circuit right at the pre-open settlement. You can actually see the IGI Therapeutics, a Glenmark Pharma subsidiary, which has signed an exclusive licensing agreement with ABBY for its lead asset, and that's led to some uptick on the stock today. That's going to be in focus. IT stocks are opening, of course, mildly in the red. We will, of course, look at it. Tata Elxsi, as was marked out even by Chakri, has seen some weakness across the board, and 5.5% downtick can actually be seen. Softness is also being seen on TCS. Irida is also another one that's come out with weak set of earnings, and another 5% downtick can actually be seen on this one. So the impact continues, and we will continue to focus on that. Let me come to pharma space. When we talk about the tariffs again, there has been this statement that 200% tariffs will be coming in on pharma, albeit after 1 or 1.5 years time frame. Now, we've already seen in the last 3 months how many times tariffs have changed, how many times statements have changed. There's a taco trade that's at play. That's Trump always chickens out, talks aggressive, then comes down lower. Now, what happens over the next 1.5 years is for anybody to guess. But is this a sweet spot to probably look at pharma, because at least there is no tariff to be brought in for the next 1.5 years? So how would you look at pharma space?
Well, you're right. In terms of, I think pharma, the number one target for Trump, if and when, which it will happen over the next couple of years, is patented drugs. And India is fortunately in the generic space, which is very essential for the US. And against that backdrop, it's unlikely that they will be hit, Indian pharma companies, with the same rate as European patented drug companies. So from that perspective, India, all these Indian companies are well placed.
Okay, all these companies are well placed. What about Glenmark Pharma? Do you have a coverage here? And what do you foresee about this stock? It's at a 10% circuit today in the pre-open space.
Glenmark, it's a good deal. It's an oncology deal. That would clearly add to its revenue. At the same time, it's margin accretive. And, the company was fairly decently valued to begin with. So I think there's sufficient upside in the stock. Even of the 10% now up, there's probably another 10-15% more to be made.
Okay, fair point. So that's the pharma space for you. Let me also talk about some of the other pockets that I just marked out. Renewable energy, IRIDA is going to be in focus. Again, weak set of earnings coming in from the company. Profit down by 35% or so. This stock had come in when it came via the IPO and some months hence as a promising stock because of the large market share it holds for the renewable energy financing and of course being rewarded a lot of projects from the government as well, and of course being seen as a potential mini Navratna. Those were the kind of aspects that we were looking at it positively. But somewhere from the last quarter onwards, we have been seeing things not going in the right direction across the board for IRIDA. What would you really say? Asset quality has really deteriorated, and that's a key concern right now.
Iridia is a good company and it is in an important space, which is renewable energy. Post Trump coming into power and de-emphasizing renewable energy as a space, some amount of slowdown has generally come in establishing new green projects. India, on the other hand, Modi continues to maintain an emphasis on green energy, which is important. Meanwhile, for IREDA, their GNPAs have increased. And these are related to one or two accounts, but nevertheless, they've increased versus, let's say, Power Finance or RECs whose NPAs are close to zero. So there is some concern that, therefore the margins might get hit. And so it's best to pause a little bit here.
Okay, got that. The markets are settling in the pre-open. You can see weakness, 25,255 odd levels on the Nifty. We'll see how things progress. But what's actually turning at record levels is silver and commodity space again getting back into focus. 1,10,440 odd levels. There's a 1,300 rupee per kilogram kind of a jump on the MCX silver level as well, and that's the one that's moving at record levels. Gold prices had been steady, but it's silver that's coming back strongly. We've also been seeing on the alternate asset classes like crypto also continuing to be at record levels at 1,20,000 odd levels too. How would you really be looking at these opportunities at this point in time vis-a-vis the equity markets, gold, silver, crypto? Chakri, are you looking at the fresh levels with keen interest?
Gold, silver, palladium, Bitcoin, all of them will, I guess, continue to do well, because uncertainty is continuing on inflation front. And high inflation is always a good thing for commodities.
High inflation is always a good thing for commodities, and there's also lack of certainty with respect to the rate cuts front. That's something that I wanted to come to. We recently at the FOMC meeting also, there's on the one hand Trump coming down heavily on Jerome Powell, asking him to cut rates repeatedly, but there are no signs yet because Jerome Powell has constantly indicated they need to see more signs of inflation consistently cooling off. They're in turn blaming the tariff-led inflationary concerns also that are preventing them to go ahead with large rate cuts at this point in time. Initially, there was some hope that July will see some cut, but now that thought is also getting postponed. How would you look at what's happening at the policy rate front and how that could also be important as a mark or a trigger for the markets to follow?
Yeah, clearly, I think July there will be a pause. They'll wait US until the following month simply because there's so many tariffs rolling out. And but it's clearly penciled that another couple of cuts will happen. 25 basis points each would happen in the US before the end of this year. So that also opens the door from the Indian perspective that RBI will cut rates, or at least would cut rates by at least once or twice before the end of this year.
Okay, fair point. Another space that I wanted to get a sense from you, 2 minutes to go before the markets open, and we'll quickly get this one. This is the FMCG space, a big laggard of a space. There was no enthusiasm. Last few sessions, we've seen some pickup. Today, again, HUL is going to be in focus. It's already indicating a higher start of about 3.5% or so major move on this one. This is after the FMCG giant has announced the appointment of Priya Nair as its new managing director and CEO. CEO for a 5-year term effective 1st of August, and she will be succeeding Rohit Java, who will step down from the role on July 31st. Nair, who's currently holding the position of President Beauty and Wellbeing at Unilever, will also become a member of the HUL board as well. So that's one. HUL has its own trigger, but the entire FMCG space is seeing some renewed focus too. Are you looking at this space at all, and what looks good to you within this entire space?
In this space, there continues to be lack of volume growth. HUL's volume growth is hardly about 1 or 2%. But the new president is, is a very capable person, and it indicates that that Unilever's focus in India will also be towards the higher margin products, beauty, wellness, and Godrej Consumer as a space continues to look good.
Okay, got that. We'll keep that stock in mind too. Let's also welcome Kunal V. Parar, Vice President of Technical Research at Choice Equity Broking, who's now joining in on the program with us. Kunal, keep an eye out on how the markets will be shaping up for today. Remember, we've already seen the consolidation play out throughout the course of this entire week. Any two stocks that you could mark right at the beginning before we take your strategy?
Well, time being, from my recommendation, it's clear-cut hold. I'm not suggesting to go for long or short in any stock because as we are witnessing some gap down momentum in the market. Further downside would be there. So I'm just searching for a perfect peak where we can bet and where we can get the confidence for creating any long position. So from my side, it's a totally wait and watch as of now.
A total wait and watch as of now. Let's quickly look at how the markets have opened in trade today. 2.5% downtick is what we expect for TCS right at the beginning. About 70-point downtick for the Nifty right now. You can actually see 25,269 right now on the Nifty. The Nifty Bank is also flat with a negative bias. Midcap's also flat at this point in time. You can also look at the IT stocks. The index is down by 1.9%. So that's the big drag that we had expected. 735 advances on the Nifty vis-a-vis 825 declines. So skewed towards the declining side, but even Stevens largely. Small caps also slightly lower in trade. So all the major indices, the Nifty Bank, mid and small caps, Sensex, they're all down in trade, as well as IT stocks that are pulling down the entire space at this point. Let's look at the stocks. Infosys down 3%, Wipro down 2%, HCL Tech down 1.1%. Even TCS is down by about 1.9% at 33.15 after the earnings that's coming in. So that's the big drag that you can see. Among the other sectors, it's defense that's down, financials that's down. We've already marked out IT for you, realty, oil and gas, capital goods and energy also down in the red. You can see some moves on PSU banks maybe, and some move coming in on pharma. That's on the higher side at this point. Capital market stocks also somewhat higher. India VIX is also taking on a higher note at this point too. So 2 to 3% of a loss coming in on the big IT names. Across the board, Infosys, Wipro, TCS, HCL Tech, they are seeing declines. Even Tech Mahindra is also about at 1582 odd levels, down by over 1%. So the IT index is clearly under pressure. On the gaining side, you have HUL. You have Kotak Mahindra Bank, IndusInd Bank. So some of the private sector banks and FMCG majors that are pulling up on the other end as well. Kunal, very quickly, if you could look at the IT stocks, how would you look at trading them amidst this weakness?
Well, if you talk about IT stocks, yesterday we witnessed TCS result, and based on this, we are witnessing some downside momentum in overall IT. Right now, IT is trading at 37,756. Further downside would be there as Nifty IT has been trading below its 50 MA. Not only this gap down opening that we have witnessing during today's trading session, further downside would be there up to the level of 36,705. So from my side, it's clear cut wait and watch until we get the stable momentum in this IT index and IT counters.
Okay, got that. Even Tata Elxsi is down by about 4% after the earnings. We're also looking at Coforge and Emphasis within the mid caps, also seeing some declines at this point. Okay, so that's the IT pack for you. Apart from this, let me also just focus on mid and small caps with Chakri, and understand how the broader markets are looking to you at this point. Are there enough and more opportunities within stock specific or sectoral specific trends that you're looking at, or are you staying away right now from the mid and small cap space?
If you're going into the current quarter, we expect probably somewhere between 8 to 10% growth for the large caps, but about 14 to 15% growth for the mid caps. So mid caps are actually growing faster than the large caps, and we think that as a trend will continue to persist, which is so therefore there are more than enough opportunities to choose from the mid cap space. On the other hand, small caps are facing the brunt of it, so we'll stay away from small caps, buy mid caps.
Okay, got that. Glenmark Pharma, we had pointed out it's at a 10% circuit, viewers, so keep an eye out on the pharma space as well. 3.5% downtick for Z Entertainment. There's also been a rejection from the shareholders there when it comes to fundraisers, and that's something that's causing some pressure there. But coming to you, Kunal, if you could just help us understand on the FMCG stocks, what's your fresh stance? HUL is ticking higher. Do you think this fresh move that continued throughout this week will be a safe space to trade in?
Well, if we talk about FMCG counters, no doubt actually is up by 3.53%. Further upside would be there this counter. The way this stock has been trading on its daily chart. If you talk about upper side target, and first target comes at 2,580, and more above it, it would march towards the level of 2,900 as well. So yes, we may see a very good upside momentum. Not only this, stock has already given a breakout of its 2,400 level, trading above its 50 days moving average. So all the equations are in favor for creating long position only at present level. One can go for creating a long position present level. We will keep PESEL at 2,400, and target wise 2,580 would be our first target, and afterwards 2,900 would be our second target. Not only this, I'm also keeping an eye on Dabur. Right now, Dabur is trading at 525. If anybody want to get into the stock, this is the perfect time to get into the stock, as stock has been trading above its 50 days moving average. Recently, stock has given a breakout of its copper and formation as well. So clear cut direction would be there on a northward. Right now, stock is trading at 526. One can keep an SL. One can keep SL at 510. And if you talk about upper side target, then first target comes at 550. And if stock breaks this level, then further upside would be there up to the level of 576. So actual and Dabur both looks very attractive, and even one can add Dabur in their portfolio.
Okay, HUL and Dabur, we'll keep an eye out on that. Capital markets related stocks is what I'll focus on with Chakri now. Anand Rathi is something we'll start off with. Again, earnings focus here. The net profit is up 28% on year basis, and EBITDA is also jumped by 30%. Now, this is one company that has consistently proven its growth, over several quarters after getting listed, and the stock has also matched up with the fundamental performance for the investors as well. Today also the stock is up by 5.7% after reporting these strong numbers for the first quarter of fiscal year 2026. What's your fresh stance on Anand Rathi? And we'll also come to the entire capital market story there.
The wealth management industry and asset management industry are well positioned in terms of the flows that we're seeing in asset management companies. So therefore, the larger players will get larger in the case of asset management. In the case of wealth management, the number of range of products that are available today to invest for Indians in India and for foreigners to invest to India provides wealth management companies as a platform to help bring these products. So therefore, the growth runway is fairly strong, and I'd still buy into Anand Rathi.
Still going to Anand Rathi. Now, why I wanted to discuss this space at large is because there are two very different, triggers that markets are looking at. One, we have big IPOs that have lined up within the capital market space. There is NSDL that's expected pretty early, and there is also NSE by the end of this fiscal year is what we actually are hoping to see, that finally NSE IPO will be coming in. How will that change the dynamics, since it's going to be a fairly large IPO and probably the largest that we will have ever seen? How would you see the dynamics change for the capital markets that are listed space, as well as how investors should be really should they be keeping some stash away and keeping for these IPOs, or should they continue to bet on the ones that are already listed? Second of all, there is this larger issue of Jane Street and the impacts that we will talk about. So let's cater to the first part first, and then we'll come to the larger conversation there, Chakri.
NSE as a company has, its unlisted shares have done very, very well over the last few years. And, even recently in the last 1 year, it has done exceedingly well. So against that backdrop, it still compares favorably versus a BSE. And when that then it is an exchange versus the capital markets companies as we know it. So yes, some amount of capital will get sucked out and therefore for the IPO, but that's a temporary thing. So therefore NSE as a company IPO, I think we are positive.
Okay. Now, Chakri, this issue of Jane Street that emerged last week, has definitely rattled a lot of investors and, of course, raised a lot of questions, for us as well to really ponder on. One, of course, we have to, commend the kind of action that's been taken by SEBI, impounding of about 4,800 crores, a complete ban for such players, large players and hedge fund players, which usually contribute such large to the volumes also to the Indian stock markets and exchanges too. But taking such an action definitely shows that the regulator is all in for protecting the small retail investors at large. I want to take a few takeaways from you as to what have you understood from this Jane Street saga, and what calls for us to really do and to ensure so that a second episode does not occur like this. Secondly, what does it mean for the retail investors, F&O traders at large?
The regulator clearly has done a very good job in identifying and bringing to book errant parties. So from that perspective, it shows that it's a well-functioning market, and that's what we want. But such events regularly, routinely happen across all markets. Nothing new here, and nothing to be concerned about. Now, as it relates to the retail investors, F&O is a specialized space. People are trained in this industry, but we've seen many participants without the training, without the knowledge, trying to do F&O, view it as a quick short profit, which with SEBI coming out and educating the investor that you have to be trained. And I think that's a good thing, that if SEBI focuses on the training bit of it rather than regulation.
Now, on the part that I was just mentioning, and a lot of graphics are also going on our screens for our viewers to really see, that we have seen, a dip in the volumes after, there has been a ban as far as Jane Street is concerned on the expiry sessions as well. What we have also seen is that on the first expiry of the Nifty weekly contract since the ban, the high frequency trader Jane Street, the total turnover of NSE has dropped by 21% compared to the previous expiry. Now, index options turnover on a notional basis has slipped by around 472 odd crores, or 72 odd trillion rupees is what we are given to understand. That's down from 601 trillion rupees as on July 3rd, the day before Jane Street was barred by the market regulator. Will the absence of such volumes also in turn impact retail investors in any way?
No, in terms of the volumes is a short-term impact, because generally when one big player for whatever reason has been pulled out, clearly but the market readjusts itself. Now, as far as the retail investor concerned, I think we stand by the view that there needs to be caution, because rather they should know what they are trading, and it is a specialized space.
Absolutely. But Chakri, what is your stance when it comes to the debate around that whether a country like ours, which is not as mature as, America, where there is an everyday expiry that happens, but our volumes are fairly large to compare to any other country in the, world. And at the same time, our traders are not as mature. Should F&O be, given free access to everyone? Should there be extreme amount of restriction there to protect? Or should there be a complete ban on F&O? There have been so many debates that are going around. What's your stance there?
No, clearly a ban on F&O is detrimental to the market, because it is a price discovery mechanism which helps regulate both the cash market as well as the capital formation market. When you're doing an IPO, you compare it of other listed peers. Listed peers valuation comes from a combination of cash market and derivative markets. Second is, there are both novice investors in India as well as in other countries like the US as well. What is important is more than a certain amount of not regulation, but maybe, capital limits. A person above a certain the capital level can participate. So which means the more capital, the more sophisticated the investor and has the ability to take his or her decisions.
Absolutely. Before we let you go, Chakri, I also want to take a view on the auto space. Finally, we are getting to hear that Tesla is making an entry soon as this month itself. By July 15th, we will be seeing in Mumbai some, sense of Tesla's entry. How would you look at the auto space go forward from here? What is going to change over the next 5-6 years? How are your, market positioning going to change then?
Auto as a space is generally going through a slowdown right now.
Yes.
The volumes are down, both the two-wheelers as well as passenger vehicles. But
Yes.
the valuations are all right. It's still buying into an M&M or a TVS Motors. As far as Tesla is concerned, don't hold your breath yet. We'll wait and watch for the actual launch to happen, because lots of things have changed between when at that point to now.
Okay, well, Chakri, thank you so much for being with us on the program today. It's always a pleasure to host you and to seek such wonderful insights that you always have to share with our viewers.
Thank you so much.
Thank you so much, Chakri. All the best to you. We'll see you soon on another edition. All
Thank
right, viewers, we have 15 minutes that are already done and dusted in the markets right now. First 15 minutes of a candle is formed. Kunal, how would you really look at the first 15 minutes play out? There is some recovery. We are back above 25,300 mark. Still down about 52 points on the markets, but this initial recovery, does it look sustainable? Can we actually turn green soon?
Well, yes, we are seeing some kind of recovery in the Nifty, trading at 25,300, up by 55 points from its low level. But I'm not getting that much of confidence to create any long. If Nifty give its close at present level, then further downside would be there up to the level of 2500, 100, because strong support was there at 25,330, and right now Nifty is trading at 25,300. So any close below this level, 25,330. May attract further selling pressure in the index, and yes, side by side even we can see the same momentum in the large cap stocks as well. So from my side, no any bullish momentum, no any view as of now to get into the index for creating any long position.
Okay, got that. We'll keep an eye out on the space then and keep a watch, but no bullish, suggestions at this point in time. Okay, some move on Asian Paints right now at 2464 odd levels that can be seen. How are you looking at the paint space, Kunal? And is Asian Paints coming back onto your radar? Why I'm asking this is because Asian Paints has been a big laggard, and now finally there is some move coming back. Will you play this?
Well, definitely, Asian Paint has a strong support at 2450 right now, trading at 2467. So, we may see some kind of upside momentum up to the level of 2535. And if stock sustain above this, then one way rally would be there up to the level of 27,020. So I think this is the perfect time to get into the stock with strict stop loss of 2410. And anybody want to create a long-term portfolio, I think this is the perfect stock to add for perfect diversification for long-term portfolio. So from my side, it's a years for long-term portfolio and for trading perspective as well.
Okay, fair point. Let's quickly look at some of the other aspects too. 4% higher now for HUL. 2507 is now with us. Any fresh targets now on HUL, or would you stick with the ones that you gave?
No, I mean, I'll stick with my previous target. As I said, 2580 would be our first target, and afterwards, even it may march toward the level of 2900. So, yes, we may see a good upside momentum. I'll stick with my first target as well. I'll stick with first target only.
Okay, fair point. I hope this has also helped you out in taking some view there. Let me just come to a few more stocks which are in momentum at this point in time. Gillette is moving up 3.7% higher. We're also looking at several other stocks that are up. Glenmark Pharma, we've already marked out for our viewers within the Pharma pack that's up. Interglobe Aviation is also on the move right now. These are the stocks that are hovering higher. at this point. Then we also have some names coming in from the broader markets that are ticking up at this point. Okay, quickly choose for us, Kunal, within the mid and small caps of Nifty 500, any stocks that catch your attention?
Well, if we talk about Nifty 500, I think a few stocks are there which looks very attractive on a daily chart. As per the ongoing momentum, I think one should focus on the Pharma right now trading at 1773. The way stock has been trading on its daily chart, I think further upside would be there. And we will keep SL in this counter. We will keep SL in this counter at we will keep SL in this counter at 1720. And if you talk about upper side target, then first target comes at 1870. And if stock breaks this level, then further upside would be there up to the level of 2000. Now, what is the rationale behind this bullish momentum, bullish view? Is that stock is trying to give a breakout of its flag formation on a daily chart. Not only this, above average volume is there, and stock has been trading above its 50 days moving average. So multiple enough reasons are there to go for a long position in these particular counters with strict stop loss of 1720.
Okay, fair point. I hope this has also helped you out in understanding a key strategy there. Let me just quickly reiterate for all of you some more movement that you can see. Among the sectors also, a large part of them are actually lower in trade. What is up? FMCG is up by 1%, Pharma is up by 0.8%, PSU banks 0.3% higher, metal slightly up, private banks slightly higher, healthcare is also up in trade, but IT is dropped by 1.2% now, metals are down, financial services is also cracking, real estate is also cracking, oil and gas is down, consumer durables about 0.5% down. So mixed trade is what we can mark, and even autos are down by 0.6%. Let's talk about what's happening on the PSU banks, Kunal. Last few weeks, we saw some momentum. Is this sustainable?
Well, no doubt we have been witnessing some upside momentum in this PSU counter. 20 means it's just 22 points up, but I'm not seeing any particular momentum, particular direction in this PSU counters, and even I am not getting that much of confidence because overall momentum of the Nifty and Bank Nifty, it's on a downside, and if Nifty or Bank Nifty fall from this level, then even means we may see some kind of pain in these PSU counters. So from my side, it's clearly avoid recommendation in this PSU counter. Not only this in PSU counters, but I also suggest to avoid private banks as well as of now, like Kotak Bank, HDFC Bank, ICICI Bank, and all.
Okay, fair point. Taking the next question on the pharma space itself, beyond Glenmark, also many of the stocks which are higher, Mankind, Ajanta, Alchem Laboratories, Clan Pharma, Ipca Labs, you're seeing Granules and Pharma, all of these stocks that are high in trade. If I have to ask you, Kunal, to pick some stocks within the pharma pack for the series, what would that be?
Well, we have already talked on the Pharma, but yes, from other pharma counters, I think Ipca Labs looks very attractive on daily chart. Right now trading at 1458, and the way stock has been trading on its daily chart. Not only this, if we talk about the weekly chart as well, it clearly signs that a further upside would be there. Stock has been trading above its 50 days moving average. Recently, stock has formed its bottom formation as well. So we may see some good upside momentum, northward momentum in this counter. Right now trading at 1457, one can get into the stock at present level with strict stop loss of 1420. And if you talk about upper side target, and first target, minor target comes at 1475. And if stocks sustain this level, above this level 1475, then further upside would be there up to the level of 1515 to 1600 level. So perfect blend of creating a long position in this counter with proper risk reward ratio.
Okay, fair point. I hope this has also helped you out in understanding a key strategy there. Let me just now reiterate for our viewers what's happening across the board. Let me also pull up some stocks within the Nifty 500 basket. The index is down by about 0.2%, but let me see if there are some fresh names that we can track. We've already marked out Anand Rathi for you viewers, 5% higher now. JP Power is up by 5%. NetWeb is also up in trade today. Acme Solar is another one that's higher. Wockhardt Pharma is up. Mankind is up. Reliance Power is up in trade. You have Ramco Cements that's up. Raymond's Lifestyle is higher in trade. Hyundai, Acums, Pharma, Nalco, various sectors and various stocks from various pockets that are up in trade and about in trade as well. Kunal, are you looking at any renewable energy play at this point in time? Do you think this is to be seen?
Well, definitely one stock is there which looks very attractive on this renewable front. I think it's NTPC Green right now trading at 108.50, and I think this is the perfect stock. Not only for creating any position for trading, but I'll suggest to go for this stock even for long-term purposes as well. Right now trading at 108, 108, and since long I've been like keeping an eye on this counter for portfolio addition. Right now trading at 108. If we talk about the trading part, then one can keep an SL at 104, and if you talk about target wise, the first target comes at 130, and afterwards even it may march toward the level of 118. Now this is for trading perspective, but if you talk about long-term perspective, then even this stock may break its strong resistance which it was placed at 155. Even it may go beyond this level up to the level of 210. So this is like a perfect stock as per the fundamental, as per the technical, for in renewables, energy renewable sector, for addition in the portfolio.
Okay, fair point. Let me just quickly also reiterate some of the other pockets then, and let me spot. Okay, on Irida, what's your call then, Kunal? This is the stock that has been hammered today. Of course, it has been trending lower from last couple of quarters, and that's on the back of weakening earnings. As well. This time around, also there's concern about surge in asset quality concerns, deterioration there. Profitability is down by 36% sharply. What would you do with Irida?
Well, definitely, if it's in my portfolio, then definitely I'll hold this stock. And if it fall up to the level of 157 to 152, I'll go for average in this counter. But for trading perspective, right now, I'm avoiding this stock because no clear momentum is there. We have seen some gap down momentum, and from its bottom, stock is trying to cover its rhythm. But I'm not seeing any particular momentum. So from trading perspective, it's clear cut avoid recommendation from my side. But for a long-term portfolio, I think this is the perfect stock. If any fall is there up to the level of 157 or 152, one could create a long position in this stock.
Okay, fair point. I hope this has answered your question well, viewers, in terms of what exactly is to be done. A lot of retail investors keep asking questions about Irida, and of course, they have huge positions also there as well. Okay, let me just talk about some of the other sectors. What about the metals and the commodity space? Kunal, how are you looking at that space really play out?
Well, if you talk about metal space right now, no doubt a few stocks are there which are trading at a very good level, pretty level. NMDC, National Renewable, Hindustan Zinc means, and if I want to give any buy recommendation, then definitely I'll go with the Hindustan Zinc. The way stock has been trading on its daily chart, I think further upside would be there from the present level. Right now, stock is trading somewhere around 429, and stock has a strong support at 414. So we'll keep SL at 410. Right now, stock is trading at 429. If we talk about target wise, first target comes at 448, and if stock breaks this level, then further upside would be there up to the level of 482. Now, this is the perfect stock not only for capital gain but for a dividend perspective as well. So yes, this is the perfect level to get into the stock for both short-term capital gain and for long-term dividend gain.
Okay, got that. So that's the story that you must be tracking. Hindustan Zinc now at the day's high point, 1.7% higher. Many such stocks also coming back in flavor, including Nalco. What about the precious metals related stocks, gems, jewelry, gold, silver, financiers? Remember, silver is at a record high level at this point also today. How would you look at this precious metal story, and how should that be played within the markets?
Well, if we talk about precious metals related stocks, and but obviously Muthoot Finance, Manappuram Finance, Titan, TVC, all the stocks are there. Okay, which deals particularly in the precious metal, and the way all the stocks has been trading on a daily chart, I think from my side it's a clear cut avoid signal because I'm not getting that much of confidence to create any position. If we talk about Muthoot Finance, Manappuram Finance, we have been witnessing some bearish momentum, and this counted further downside would be there. If you talk about TVZ and Titan as well, then all both these stocks are trading at a lower level below its 50 days going average, so further downside would be there. So right now I am avoiding all these stocks which are particularly dealing in the precious metals, particularly in the gold side.
Okay, got that. All right, 9:43. We'll start wrapping up the morning edition, but we'll also take Kunal from you a view on the strategy for the next week now. And what exactly would you advise on the index level and on the stocks level, if you could highlight for our viewers?
Now, if you talk about for index level, then 25,330 is a strong resistance as of now. If Nifty sustain above this level, then a sharp recovery would be there. But if Nifty give its close below this level, then further downside would be there up to the level of 25,100 to 24,800. So anybody want to create their position in this Nifty, please keep an eye on this 25,330 on its spot level. And for stock side, I think one should keep an eye on Infosys. No doubt, we have been witnessing some kind of downside momentum in the index, IT index. But yeah, this is a perfect time because stock is trying to take in a support of its 50 days moving average. Not only this, stock has a strong support of its previous bottom, which it was placed at 1567. So this is the time to get into the stock with strict stop loss of 1560. Upper side target would be at 1650.
Okay, no matter that the ID stocks have started on the back foot, at least Infosys, it looks as the perfect time to take an entry. And remember, after TCS, it'll be Infosys that will come out with the earnings. That's where Kunal is keeping his focus on. And of course, IT stocks, there could be some buying after this initial dip is what he believes at this point in time. Thank you so much, Kunal, for being with us on the program and for helping all of our viewers out navigate through the fresh trades in the D Street as well. At this point in time, viewers, the Nifty advanced decline ratio has improved for the better. And we are seeing some improvement coming in on the Nifty to 25,307 is back with us. Let's see how this continues and whether we will actually see a green close today after starting on the back foot. We'll leave you at that. Many thanks for joining in, but do stay tuned throughout the course of the session. Remember, it's the beginning of the earnings season, so we will have a lot of companies come on the channel. Management's talking about their earnings today, so keep an eye out on all that. IRIDA is something that I'll be clearly watching out for at 11:30. I'll be speaking to the management of IRIDA to help you really understand what's gone wrong with the earnings this time. What is it that the company really hopes to see? Are there any improvement signs that are visible already for the rest of the quarters or FY26? All of that will be coming up at 11:30 and of course 12 noon. All your daily calls, queries will be answered. So stay tuned on Business Today Television. Lots for you to track.
Ladies and gentlemen, to our